Gents, let us get to your stock picks for today. Gary, what are you choosing?
Okay, so I'm going drill, baby, drill. So I'm going with SLB, which is formerly Schlumberger. Went through a rebrand as a kind of, I suppose, repositioned itself more towards a technology services company rather than that old oil fields business that it was. At the moment, they've just done a deal for Champion X, which is another oil services business that was last year. We expect synergies to kind of flow through after that, probably around $400 million this year. They've also got a 2.3 billion US dollar stock repurchase program. They're planning on returning about 7 billion to shareholders over the next 2 years. It's pretty cheap given that it's S&P 500 company. Just in earnings terms, you're talking about kind of 12 times earnings on 1 year forward. A lot of people, the bears, I suppose, around the stock are saying that the capex pipeline for oil and gas is diminishing. As we heard from the inauguration last night, it's drill, baby, drill. And I think it's something that they will benefit from. So even with lower oil prices, not technically an oil company, it really is an oil services company. And their digital division is doing pretty well as well, which really focuses on extracting efficiencies, which maybe will be good for the business overall.
Okay. JP, what are you drilling into today?
PDD Holdings, a Chinese company listed in the US that a lot of people probably think is going to get negatively impacted because of tariffs. But there's a few reasons I'm choosing this. I actually chose it also last year, August, a few weeks before they then had a conference call for the quarterly results where they frightened the markets and the share price fell, I think, from around $130 to $100. So it's still trading around $100 now. But they've diversified away from the US, and even for the packages they ship to the US, they still have de minimis rules there, because otherwise the Border Patrol need to inspect 1 million packages a day that come from China. It is ridiculous. So it's sort of like a problem that's almost too complex to solve for. So I would be surprised if tariffs are going to impact PDD negatively. And even if it does, they've got the rest of the world, because they own the Pinduoduo platform in China, but they own Temu in the rest of the world. And Temu, yes, grew very quickly in the US, but it's now available in like 80 countries or something, including South Africa and a large part of Europe. So with that diversification away from the US, that risk mitigation away from Trump's tariffs, very cheap, high cash balance, a lot of negativity towards China. That's why the opportunity exists. I think that PDD Holdings at $100 is a good opportunity if you think that China is going to recover from a macroeconomic perspective, and PDD are going to solve for the tariff problem from the US.
All right. Well, thank you so much for your time and for your analysis, gents. I do understand that there are quite a few questions that we didn't get to today, but don't worry, to our viewers, Simon is back tomorrow. That is it for tonight's Stock Watch. Thanks to our guest Jean Pierre Verster from Protea Capital Management and Gary Booysen from Rand Swiss. Up next, The Close. Stay watching.